Welcome to Blockchain Week Day 4. My name's Amy Rose, and today we're going to be talking about CBDCs. Our moderator today is Hannah Glass. We are joined by Campbell from R3, who R3 is also a sponsor of this session. We have Lisa Wade, who will be joining us in just a moment from DigitalX. Rene, Michau from Standard Chartered. Rene, did I pronounce that correct?
Rene, Michau.
Michau? I knew it. Okay, Rene Michau from Standard Chartered. And Sudhir Pai from Capgemini will be joining us very shortly as well. So I'm going to leave it over to you, Hannah. Enjoy the session, guys.
Thank you so much, Amy Rose, and good afternoon, everyone who's joining us. As Amy said, my name is Hannah Glass. I'm a senior associate at Kingham with Mallesons, and my practice is everything to do with blockchain, crypto, payments, fintech. And so all this whole discussion around central bank digital currencies is something I'm a little bit passionate about. But you're not really here to listen to me. You're here to listen to our incredible panelists, two of whom will be joining shortly. But on the line, we already have Rene Michau, who is the global head of digital assets at Standard Chartered. And Standard Chartered has obviously been doing a significant amount of work in this space. We also have Campbell, who's the country manager at R3, who've also been working on central bank digital currencies and the infrastructure around these products. And Sudhir Pai has just joined us all the way from New York. Thank you so much, Sudhir. He's the Chief Technology and Innovation Officer at Capgemini. So central bank digital currencies. We talk a lot about this, and we talk a lot about it in the context of digital assets. But the real idea behind today is actually to dive into what are these, why do people use them, and are they really relevant in a world where we're talking about stable coins, where we're moving into Web 3.0? I mean, do central banks really matter? But before we get into that, Kel, let's start off with you. What is a central bank digital currency?
Well, it speaks for itself, doesn't it? It really is a digital currency, and I suppose we can liken it to any of our other crypto-based type coins or ICOs. However, it's issued by the central bank and it's backed by the native fiat currency. So therefore, it is a high-quality liquid asset. It holds a lot more relevance in the current day's economy. So obviously, we're talking a lot the last couple of days about the future and where things can go. But right now, central bank digital currency is the tool of choice, or could be a tool of choice for settlement that maintains that high quality liquidity.
So what we're talking about here is really how do you transfer money? And I understand that R3 has been doing quite a bit of work in this space with a number of central banks all around the world. What have you seen in your travels working with those different central banks?
Actually, I wish I'd travelled with all of them. So, however, I do get briefed quite a lot. And I think, R3 has been involved with central banks and a number of other regulators in our original formation of the ecosystem. Most of the top 60 or the largest 60 countries globally and their regulators were involved in the ecosystem. So it differentiates us a little bit in that we regularly engage with those people and look, we facilitate a lot of things. So all the way back to Project Jasper with Bank of Canada, 2015-16. There was a number of projects, and I actually don't know the number, but then it goes all the way through to Project Dunbar, which obviously the RBA has worked with MAS and a couple of other countries, and it finishes today. So there have been a sequential series of testing, and some of those central banks have wanted to test their own theories. But what we're seeing now is, and probably we got 140 organisations together in 2020 and throughout 2021. They all worked together to share that IP and information, and have run a few projects since then. Namely Project Jura out of Switzerland, and with the Banque de France, and cross-border payments there and settlements as well. So there's been some really exciting movements in this space. And I think the report from Project Dunbar yesterday said it all. It's provided more questions that need to be answered than actually, but what it does show is the solution is working.
That's very exciting. And I believe we are now joined by Lisa Wade as well. Lisa Wade being the CEO of DigitalX. Hi, Lisa.
Hi, everybody. Thanks for having me.
Pleasure. Thank you for joining us. And actually, it's perfect timing because I was actually about to throw to you with a question. We've just heard from Kel about what are central bank digital currencies and some of the projects around the world. But one of the questions when we're looking at this is, what's the model of central bank digital currency? And in particular, the two models that we hear about are retail and wholesale. But what does that actually mean?
Yeah, that's a really great question. And I sort of do break it all down into 4 quadrants. So the quadrants I use are wholesale central bank digital currency, wholesale stable coins, retail central bank digital currency, and retail stable coins. And the reason why I personally do that is because I think that you need different utility inside of a wholesale central bank digital currency than you do for retail, just because wholesale is high value, low volume, and the programmability needs to be infallible because you're dealing with large amounts of money. And in retail, we need to focus on speed. And, you know, retail is really where we're competing against some excellent payment rails that we already have in Australia. And in wholesale, what we're looking at is some really old-fashioned processes and a whole lot of process improvement that can happen in really large transactions that, you know, crazily are taking months to settle. You know, I was sitting when I was at National Australia Bank, I was sitting next to the team and they had piles of paper and envelopes flying around the world. And, you know, that really is a bigger opportunity to, you know, remove operational risk in the wholesale market and to, you know, have some really great process efficiencies is my reason for breaking it up.
Now, that's actually a really interesting point. Now, I just want to say we've used this word settlement a few times. What we're talking about when we're talking about settlement is actually when you enter into a transaction is how do you actually get paid and when do you get paid? So that's what we're talking about, is it's what happens with the money. But Rene, I'm going to throw to you because I know you've also worked in a few projects around the world and you may have a slightly different view on this wholesale retail distinction.
Yeah, thanks, Hannah. So yeah, at Standard Chartered, we're fortunate to sit across, you know, a significant number of countries. We are live currently in Nigeria with the central bank digital currency that's been launched there, the Naira. And there's work happening in Ghana, and obviously we're working closely with China as well on theirs. When we think about central bank digital currency, I do think, you know, we as Lisa clearly outlined, right, that we do tend to think about this from a retail and wholesale perspective. And we often, you know, we've done so much work in various countries, Australia included, on improving the different payment rails and the way that settlement works. What I think is a really interesting thing to think about is the programmability effect. And if you look at the way that cryptocurrencies or public network innovation is happening, there isn't really a distinction between high value transactions and low value transactions, the way we think about that traditionally. And so the question that you know, that I spend a lot of time thinking about is the retail wholesale divide so important? Now, that's not to diminish Lisa's points, because getting large value transactions that are structural for an economy correct is absolutely critical, and speed and convenience for retail is also absolutely critical. But I think the potential for central bank digital currency can be unlocked more effectively by focusing on the programmability aspect of digital currency infrastructure, by creating a robust framework, learning from the mistakes and lessons and losses in DeFi and other experiments, and really using that as a way to potentially realize what we've been trying to achieve with open banking by creating essentially an operating system supported by central bank issued currency, or specifically legal tender in a jurisdiction that supports commercial trade, but provides the opportunity for money to be embedded in the way that companies and individuals interact. And to me, I think that's the promise of central bank digital currencies, that is much harder to contemplate initially, because it's kind of a chicken and an egg thing. You can't imagine all of the potential use cases today that would provide, but by providing a stable programmable infrastructure, it creates the space for that innovation.
It's interesting that you come back to this concept of the infrastructure. And now we're talking about, it's not just about the money, it's about the technology that sits underneath it. And sorry, Lisa, were you about to throw in?
Oh, no, I'm waiting for you.
Okay. As I've said, if you want to jump in and you want to make comments to one another, totally cool with that. But Sudhir, I was actually going to ask you, because obviously you're coming from more of the technology background and working with a lot of financial institutions. How are you finding these discussions going when you're actually speaking with institutions and saying to them, well, you can play in this space, but there is a whole technological side to this as well as economic?
Yeah, sure. So in my current role with the global hat on across multiple geographies, so I guess there is as much confusion in central bank digital currency as much we can talk theoretically what is going to happen. And different central banks have used different approaches. As I've been personally involved recently with MAS challenge with ANZ Bank into the top 15 CBDC finalists. So I would think there's a misconception that everything has to be a blockchain and distributed ledger and so on as a starting position. So clearly we are addressing 3 layers, right? So the issuance, distribution, and the infrastructure. So infrastructure can come in different ways to solve these problems, and I know it may be token-based, decentralized way of solving it, or it may be CD5, central and decentralized way of solving it, etc., etc. So I would think different banks have using different approaches. Still the verdict is out there. One key point I wanted to make it very clear here is the interoperability, right? So the CBDC eventually will have to operate irrespective of what technology and how it is being used, and it has to operate in a different context, right? So something like if you look at European context of ECB as European Central Bank, which is central bank of central banks, right? So different central banks can have different terminologies and technologies, but they all have to work together, interoperable, as well as work with fiat currencies and any other forms of tokens. So to me, that is a bigger portion of technology that one has to worry about, of course, in addition to the data protection and securities.
Yeah, we all look forward to the day where we get the network of network effects and everything else that goes with it.
Yeah, it's really interesting because I think one of the drivers of some of these projects actually is the concept of interoperability. And we did start from a position when, if you're going back sort of 5, 6, 7, or 8 years ago, where people said, oh, if it's all blockchain, it's all interoperable, and therefore we've got this network effect. But I think we're coming to a point where we realize that's not really the case. But I want to ask you, Lisa, about that, because I know that you've worked on a few different projects where this concept of interoperability, particularly between central bank digital currencies or monetary systems and these distributed ledger projects, has been quite key to their success.
Yeah, thanks, Hannah. As you know, in Project Atom, which was the project we worked on when I was at NAB with the broader market, Combank, Perpetual, and the Reserve Bank, we did place a big focus on interoperability so we could get some learnings. And, what we really felt at that time was there is going to be no one silver bullet answer, and we all need to be able to interoperate together. So we had had, some great work we did on that, and we did prove the interoperability in a sort of a backdoor way by issuing the syndicated loan on a separate platform to the central bank digital currency, and managed to affect the atomic settlement, which for those newer to crypto, that's the settlement of the cash leg and the asset leg at the exact same time via the conversation between the money and the asset. We managed to affect that inside of the transaction, and that was hugely important. One of the things that this week has really shone a light on as we go into the mainstream moment, which is the topic on Monday, from my point of view, is the community effect of that. And Kel, I thought that was awesome what you just said, network of networks. And what's the community aspect of that? And I do think that interoperability will play a key role in that, because I just feel as though often we try and get one right answer and silver bullets, and I really think it requires all of us to work together and move really quickly, but at the same time be able to communicate with each other on different platforms, different languages, in different ways, so that we can all be one community and really affect the change that we need, rather than trying to race. In finance, we have this term which everybody will know, race to the bottom, and I'd rather consider this sort of stealing your line again, Kel, the network of network effects and the community aspect. Maybe we can race to this new paradigm that we're talking about and do some good with it.
No, I would think the technology here.
Sorry, Sudhir, you go ahead. Go ahead, mate.
No, I was just making one comment that no matter what technologies we are talking about, or interoperability, end of the day, right? So it has to reach everyone, right? When you talk about retail CBDC, the foundational principle is it's accessible, it's offline, online, and it has no compulsion, right? So there's no compulsion to have internet, no compulsion to have a very fancy technology, right? It has to just work as a currency, it works today. Preserving meaning privacy and other stuff.
Exactly. The whole idea behind a central bank digital currency is it is money. And it has to work. And I think that we've seen with some places around the world where they've tried to implement this, and then they end up with month-long outages, that causes a significant issue. We know in Australia, if you have an hour-long outage to the internet and you can't suddenly pay, the whole world, we all go into a panic because no one carries cash anymore. But Rene, I want to throw back to you, because I think you were about to touch on something quite interesting in some of the projects that you might have been working on also in this sort of collaborative environment.
Yeah, sure. I mean, I think that, that I wanted to pick up on the community point of leases, right? Because if we look at, referencing the crypto world and DeFi, the pace of innovation is very much around smaller teams oriented around specific outcomes, but which are interoperable and which work as communities and a broader community, right? That's been as much a part of the success of this space, or the growth of this space, as has the technical advances that have been made. So to Lisa and Kel's points around networks and to Sudhir's, that community construct is important as well. I guess it might be worth referencing the Project Carbon work as well, right? Which is where we have a lot of.
Oh, my Project Carbon, my baby.
Yeah, exactly. You might like that. Right, where this is, we're dealing, like what this is a really great construct that's for is there are problems that we need to solve, right? The climate is a very big problem, and it can't be solved with a race, right? It's not an independent, competitive construct. It is a collaborative construct, and so the work that's happening in that space to bring together the experience of cryptocurrency constructs and technologies, but that community collaboration and the focus on a much broader outcome has established that framework for and will continue to build out a product that is really meaningful and interoperates across a lot of different networks. Lisa, I can see you want to jump in.
I have to have a comment about that because I spent every Tuesday, Wednesday, Thursday waking up at 4 a.m. last year on that one. And, it really, I love the way you've just said that, because carbon, for one, is a place that we can do a lot of good if we work together. And, our catchphrase on Project Carbon in the beginning was always, if you want to go fast, go alone. If you want to go far, go together. And it's music to my ears hearing that played back. And I do miss Project Carbon, which is Carbon Place now. But
yeah.
I'll be back on that. I will, we'll find a way. We've got a venture strategy at DigitalX, don't you worry.
You'll get there, Lisa. And it's true too, because if we get to the true network effects of what DLT can provide, and we spend a lot of time educating business executives who really look to one side of it and always pick up on the negatives. They're always full of objections, risk management. Why can't we do this? But when we can all see the same data at the same time, and then we can all transact on that same item, token, whatever it is, at the same time, and then we get that atomic resolution. And when we can get all the chains or a majority of the chains working together, I think that's really key. And the Project Jura, we interrupted heavily with Hyperledger Fabric. The South African bank has done wholesale CBDC with Corda, and they've done their retail side with Ethereum. And when they come into doing other projects with us, it really does play out. And obviously Project Dunbar worked with Quorum and proved that. And there we actually did an atomic swap. And I may have to go back to my notes on this, but I'm almost sure we did a node-to-node atomic swap. So we're working on the ability to atomic swap on all levels of the chain. And then one of the key things is the ability to do that in transaction as well. And that's easier said than done. And so there's a lot of work being done with the standards bodies and even with the Hyperledger Foundation and other foundations that have been formed across the globe to come up with those answers and come up with the technical solutions. So we can go back to the places like the central banks and the regulators and say, this is how we're doing it, and we're meeting our KYC objectives, or KYC and AML objectives, and then we can meet all these business benefits for any digital asset that we choose to trade. And let's hope we can all start with carbon. We're definitely going down the bond space, and the green bonds are starting to come out. For example, Euroclear are now rolling out end-to-end. Deutsche Börse will. London Stock Exchange is doing their big FMI. They are saying that 80% of bonds in 2022, by the end of 2022, will be done tokenized. So we are moving there very quickly. And a bit like the internet, just to jump in there, a bit like the internet, and showing my age here, when I was doing my postgrad at Melbourne University, I could remember I could communicate with guys at New York State University and a couple of other universities doing my postgrad on the internet. And then within a couple of years, it was in our hands. And I think we're at that bridging stage now, as we call it. And basically, I liken it to that. Once the market infrastructures, like Project Carbon, start to come in play and are end-to-end digital or tokenized from the issuance to the settlement, then we'll see the rest of the world jump on board. And, some of the real benefits for people like the banks and other regulated entities is actually not the ability to make that payment. It's not about payments to them. And Lisa can attest to this, and I'm sure you can, Rene, as well. It's the middle and back office savings. It's the reconciliation.
Oh, look, just on the example of Project Carbon, nothing works in real asset tokenization without the payment leg. And that is something that we had a huge focus on in the end in Carbon Place and Project Carbon, because it takes all of us working together. Like I'm going to just say something now. I don't work at NAB anymore. It's actually stupid. It's stupid to pay for a carbon token with an old-fashioned payment rail. It's proving something because we needed to do the work and we needed to do the lifting. However, it just doesn't make any sense. And it sounds like that battle has been won with Carbon Place, and I think that'll be a great example. And then I have questions around, firstly, just to your point about the internet, I just found a really fun, geeky cheeky fact, and I'll reshare this LinkedIn article, that we're something like 3 times ahead. I can't find the exact stat here, but I'll post it. Something like 3 times ahead of the take-up of the internet where we are in DeFi in the relative amount of time in terms of innovation cycles.
Yes.
So where the internet was at, say, year 5, we're triple the size of that in DeFi, which is hugely exciting, I think, for all of us here. So pretty excited about that. And then my question to the group is, because I'm in this question, that we are almost, as advanced as this conversation sounds, we're almost reinventing the wheel, because in crypto, this is already happening. We're trying to do it our way. And all week I've been thinking about, maybe standing on my head and thinking about this differently, of like what is already happening, and how can we just be working with and be part of that community, rather than, we're trying to build these financial rails for a system which we're then, on the other hand, talking about a paradigm shift. So I guess I'd be curious to see how this group feels about that too.
No, I guess just to build on what you're saying, right? So one of the important things which we should not do is ignore all the existing good stuff and financial infrastructure that's out there. For example, the whole national identity systems, target to services payments, if you look at in Europe, a SingPass in Singapore, etc., because those are quite good, right? So it is solving half the problems. Now, we don't want to reinvent the wheel just because, there's a new technology and new ways to do. I would think there's a lot of existing infrastructure can be helpful in securing the rollout of new currencies. And then we should always aim to reuse them and put more efforts towards innovation of what all things can be done. Like, for example, direct GST payments, or, helping immigrants who are more on the inclusion side, and so on and so forth. Focus more on the use cases as opposed to reinventing the existing infrastructure that can be used.
Yeah, it's a really interesting point, and kind of to tie in both Sudhir, your and Lisa's concepts. We're talking here at how do we leverage what we already have, and we've sort of got we've got this, and Lisa's right, and I know you spoke about this on Monday. There is a paradigm shift happening. We have an existing system and an existing infrastructure, which is incredibly robust and secure. But we've also now got this digital, decentralized infrastructure, which is no longer new. The Bitcoin white paper came out 14 years ago now. Right. So we're now at a situation where we actually have an understanding of it. And if you read some of the information that's coming out with things like work that other institutions are doing for monitoring transactions, there are so many benefits that we can now have using this decentralized transaction, which aren't just decentralized system, which aren't simply, let's try and create a blockchain and the whole world's going to be wonderful. It's actually, we understand the role that networks can play. But how can we leverage both of this, both the decentralized DeFi with strong banking systems? And Rene, I'm going to throw this one to you, because I understand this is again something you've been looking at, is how do we actually marry the two with Web 3.0 and safety and stability in banking?
Thanks, Hannah. I mean, annoyingly, there's too much agreement on this panel, right? We should be arguing with each other a lot more to entertain the audience. So I'm going to continue to be annoying. But I think what's interesting here is that the benefit of the internet was scale. So to build on Lisa's point, right? We did a lot of work around, as institutions, trying to build massive internal networks to solve the problems that the internet actually solved relatively effortlessly, because we were fearful of putting stuff on the internet. I feel we're in a similar spot here, right? Where we do have infrastructure that's proven to be scalable, that is proven to be robust in many ways. And not only that, but we have public experiments that are showing us where it can fail and where it can succeed. So this, I think it's very easy to point at DeFi and say, oh, look at all of these losses, look at all of these hacks, look at all of these things. But it's kind of, by comparison, the impact of those failures are much less than what we saw in 2008 and 2009 in the financial services sector, right? where experiments also failed in a much more spectacular and impactful way. And so, we have this kind of, we have a research and development public space with economic models that surround it to sustain it, that provide really good insights.
Yeah, look, if you want a bit of controversy, I'm always happy to weigh in and, have a bit of fun with what you've just said, because let's face it, in 2008, we dropped the ball. We had a massive global financial crisis, and the people that are existing in this new paradigm, they don't trust us. They don't trust this conversation. They have grown up in a world where they want an alternative, because we leveraged the hell out of the world and we broke finance. And we're trying to pretend that it didn't happen. And all we've done is print money so that we can all get through it. But we haven't changed anything, because the whiz kids in finance now are trying to leverage the leverage inside of crypto and, redo the mistakes in a different format. And I think we have a duty of care to younger generations to actually rebuild this from the good up, and not make the same mistakes of the GFC. And, Monday really woke me up to the fact that, Mike Novogratz said it, as elders, we're custodians of this knowledge, and we're here to guide the younger generations as risk managers, not to dictate so the same mistakes can get repeated. So those smart people that caused the GFC can now make more money in crypto. It's to actually be the guardians of this new paradigm, and to let it happen in the best way that it's possible. So I'll leave it there, because you want a controversy, I'll throw that one in. And
but I think that's great.
But if we say that though, Lisa, right? What's the role for regulators? Because this is a really interesting conversation for us as a regulated institution. Let's follow that line of conversation a bit further and say, well, okay, we are seeing the mistakes, being learned from in the way that DeFi is being constructed. And you're right, there is a responsibility there. We have a regulatory, a construct where regulators have been so focused on trying to repair what happened in 2008 and 2009 that now what's happening in crypto is still relatively new from a regulatory perspective. Right? I'm sure there's heaps of conversation going on. There's massive engagement, so not criticizing that. But if a regulator's responsibility is to protect and to safeguard the economy and protect the citizens of an economy, then where does that leave regulators in this world, which is essentially right now self-regulating? I think that's a question that I struggle with, right?
Did you know Hannah was the one that said this, because the amount of oversight that is possible in these systems is so great. Hannah posed the questions, will they want to have access to that? Because it actually puts the onus from back on them rather than on us. Because right now, effectively, we self-regulate until, and I'm an impact investor, so I'm speaking, we regulate ourselves until we get caught if we do something wrong. And there is a potential that actually we can be held to a higher standard. And then Hannah said it herself, are regulators equipped for that level of oversight they can have?
Wow, we are getting into a very different discussion now.
Yeah, it's a good discussion, right? So one can argue how much is decentralized, is truly decentralized, right? So is decentralized storage, is decentralized compute, is decentralized, right? So at some stage, all companies will finally have some sort of centralization, which will again, starts the conversation how much you are shifting right.
Yeah, I mean, I think what we're talking about all of this is these are the fundamental questions at the heart, not only of central bank digital currencies or financial institutions in this space, but actually as we're moving into Web 3.0, as DeFi is coming about, and DeFi is not just, crypto people, crypto natives, it's actually now on front of mind for everyone, because even the whole concept of atomic settlement, the fact that that's even possible is a decentralized finance concept. And I know I'm probably going to get the wrap up, possibly had about 5 minutes ago. So I think we may need to leave this discussion there, but I just wanted to thank everyone on this panel for your incredible insights. We have really run the gamut of this space, and we could clearly talk about this for hours. So Kel, Rene, Lisa, Sudhir, thank you so much. This has been a wonderful discussion. And maybe next time we can do this in person and possibly for an hour or two.
I think it sounds like we need more time. It's so nice to see everybody. Hi.
Thank you so much for having me, and such a great panel. Thanks very much to all of you.
Thank you.
Likewise, all of you from R3.
Thank you all.